Greetings and salutations. Welcome back to our channel, your reliable source for insightful content. We're so glad you're back with us today, inviting us into your digital space, allowing us to share our knowledge and passion for various intriguing topics. Today, we're about to embark on an intellectual journey, a deep dive into a world that has commanded attention, stirred discussions, and molded the landscape of monetary fortunes. With each episode on our channel, we aim to unravel the mysteries of our world, one topic at a time. Today, the subject of our focus is a realm that's fascinated many, a realm that's birthed countless debates, conversations, and conjectures. It is a subject that has the power to turn the tables and has been the foundation of innumerable fortunes. The rich have become richer, the courageous have turned billionaires, and the curious have become the savviest of investors. Yes, this is the exciting, unpredictable world that bridges the gap between the bold and the cautious, the informed and the novice. It is the world where fortunes are made overnight and lost in the blink of an eye. So buckle up as we dive into an ocean of possibilities where every ripple could turn into a tidal wave. The world we are delving into today has charmed entrepreneurs, fascinated economists, and captivated scholars alike. Yes, you guessed it right, we're talking about the stock market. Starting from the foundation, what are stocks, or shares as they are often called? To further explain, let's indulge in a simple yet powerful analogy. Picture for a moment a large, delicious apple pie. Every single slice represents a share, a portion of the whole pie. Now replace that apple pie with a corporation like Apple or Microsoft. Each piece of the pie, or in this case each stock, is a claim to a part of that company's assets and earnings. When you invest in stocks, you're essentially buying a slice of that pie. This doesn't mean you're buying the actual products or services that the company offers, but rather, you are buying a piece of the company's value, its profits, and its potential growth over time. It's the equivalent of saying you have a stake, a claim, in the company. And of course, the size of your slice is proportional to the number of shares you own. The more shares you buy, the larger your piece of the pie, and thus, the greater your claim on the company's assets and earnings. This is the essence of being a shareholder. You're not just an investor or a speculator looking to make money from fluctuations. You're an owner, however small, of a potentially big and successful company. And as an owner, you have certain rights and privileges that come with your shares, such as voting rights at shareholders' meetings and the right to receive dividends. By understanding what stocks are, you can begin to appreciate the benefits, risks, and responsibilities of becoming a shareholder. When you buy a share, you're buying a piece of the company, making you a shareholder. Stocks, often considered the golden tickets to the corporate world, are intriguing. Now, you might be wondering, why should one invest in stocks? The answer to this question can be found in the possibility of reaping lucrative returns. Since time immemorial, stocks have been regarded as the high-stakes gamblers in the investment arena, traditionally offering some of the most handsome profits when compared to other types of investments, like bonds, real estate, or commodities. Their allure doesn't stop there, though. Investing in stocks also provides the opportunity for capital appreciation, meaning the value of stocks can increase over time, leading to potential profits when sold. Additionally, the aspect of liquidity adds to the appeal. Unlike some other investments, stocks can be bought and sold with relative ease, giving investors the flexibility they need. Furthermore, a key portion of the charm of stocks lies in dividends. Many corporations choose to share a part of their profits with their shareholders in the form of dividends. Hence, shareholders can find themselves receiving a consistent payout simply for possessing the stock. This regular income can act as a nice cushion in times of market volatility, so stocks are not just about potential capital gains, they also offer a steady stream of income, adding a layer of stability to your investment portfolio. Stocks are indeed the golden tickets to the corporate world. Now we finally arrive at the part you've all been eagerly anticipating. How exactly does one go about purchasing these stocks? You might think it's a complex process steeped in financial jargons and complicated procedures, but in reality, the process is much simpler than you'd imagine. It's all about taking the right steps and understanding the context in which you're operating. At the heart of buying stocks lies the first and fundamental step: opening a brokerage account. This can be achieved through a multitude of avenues. An increasingly popular method in the digital age we inhabit is through an online platform. These platforms usually have user-friendly interfaces, designed to make the process as smooth as possible, even for beginners. A few clicks and you're on your way. Alternatively, you can also choose to go the traditional route by reaching out to a broker. A broker can provide a personalized touch, offering advice based on your specific circumstances and financial objectives. They can guide you through the process, clearing any confusion and helping you make informed decisions. Once your account is up and running, you've crossed a significant milestone. The next step is to place an order for the stocks you wish to buy. This could be based on research, advice from your broker, or simply a hunch. You'd be surprised by how straightforward this step is. It's almost like online shopping. You identify the item you want, add it to your cart, check out, and voila, you're an owner of stocks. Now that we've walked through the process, it's time to put it into action. It's as straightforward as online shopping. However, before you dive headfirst into the stock market, it's critical to undertake thorough research. Numerous resources are available for your convenience, encompassing various facets of the financial world. These may include financial news outlets, in-depth company reports, well-formulated analyst recommendations, and more. It's essential to leverage these resources and explore in detail the companies piquing your interest. Comprehending the financial landscape of your chosen companies is key. It assists in making informed decisions and mitigating potential risks. Remember, knowledge is power, especially when it comes to investing. To wrap up, investing in stocks is an exciting journey, a way to increment your wealth. It's not a random risk. It necessitates knowledge, exploration, and a lucid strategy. Remember, every investment carries risk, so be smart and prepared. And now we conclude our beginner's introduction to stock market investment. This video is part of a series providing insight into personal finance and investment. If it's been useful, like, subscribe, and tap the bell icon for updates. This ensures you're alerted to our latest content. Thank you for your time. As always, happy investing.